Let's connect then right here in our studios with Sridhar Sivaram, who's Investment Director at Enam Holdings, here to talk about his market outlook, view on earnings, as well as lots more. Thank you so much for taking time out. Lovely to have you with us in our studios as always. I wanted to just start off by talking about the backdrop right now, given the fact that it seems like all eyes are on the US Central Bank in terms of action, but what do you think is going to be the guiding light for our own markets? Will it be earnings to a large extent, the macros, or just a combination of it all?
No, I think the macro plays a large role in deciding how the markets over a medium and long term moves. And the macro setup both for India and for the US isn't looking that great. Even though you can say that for India, large part of the rate hikes is already over, but for the central bank to actually cut rates, your inflation number has to sustainably go below 4, which we don't think happens at least for this entire financial year. So you'll have higher rates for a longer period of time. And same for the US, that for them the inflation number has to go below 2 before central bank can pivot. And we don't think that happens, at least for the next 6 to 8 months. So we will see higher rates for a longer period of time, and specifically US will have more issues because they are coming off almost a 0% rate for the last 7-8 years, and now we are seeing the rates higher for so long, which is why all these banking related crises we are seeing in the US, and that will manifest itself in various other forms. As of now, the resolutions have been very quick and fast, but we don't know how long and how many of them they can rescue. So this is a space which has to be watched carefully. Our broad view on the market is that we haven't done anything for 18 months, and maybe for another 6-8 months the data will be very choppy. So it's better to be cautious, protect your capital, and build your portfolio which is a bit more sustainable for the next possibly 18 months.
So you're talking about the banking crisis which US is facing, and so far, yes, the contagion has been limited, but back home, do you anticipate any sort of impact? I know the banking system in India is very, very, stronger than what it is in the US, but anything to watch out for?
So actually, there's a big difference between US banks and Indian banks, that we've always seen a very high rate. And if you just look at, say, mortgage as an example, barring the two COVID period when the mortgage rates actually fell to 6.5%, we've broadly been in the 8 to 9% range of mortgage for a very long time. The last time the mortgage rate fell below 7% or closer to 7% was in 2001. So actually we're used to a higher rate. So I think maybe the people who borrowed at 6.5, now that the mortgage rates have gone to say 8.5, they may have some issues. But even there, we think that tenure gets extended to some extent. So we don't see a large, big issue as far as financials are concerned. We are actually very bullish because in the last 5 years, all banks have cleaned up their balance sheet so well. Most banks have extra provision cover. Due to COVID, they had kept COVID provisions. And if you look at the financial numbers, I think the NPA numbers are far lower than what most banks had guided. So we think we are in a sweet spot right now, but it has to be watched carefully. As you mentioned, one of the corporates had issues yesterday. So you have to just watch the space carefully. We are quite bullish. We are overweight on financials.
Well, that's exactly my next question, the corporate that you talked about, because these shocks and surprises keep coming into the system. And for now, what we understand is this is something which is not provided by the banks, and they didn't have much inkling about it. At least they didn't have any discussions around that. And the last time we spoke, I think you did mention that you were quite positive on infrastructure and airports as a vertical, which is seeing a lot of favorable momentum. In context of that, aviation as a sector, Indigo is the only investable name. How should one approach it, airports as well as aviation?
So one is that, in infrastructure in general, if I speak that if you look at the budget numbers itself, they have sort of allocated a 33% increase in the capex spending. We are going to spend almost, say, 10 lakh crores just in capital expenditure in the government's budget, which has a multiplier effect. So we think that this space in the last 3-4 years has seen significant focus from the government, be it roads, ports, railways. So we are quite bullish that the spending will continue here. This is a very tough space to buy stocks on a generic basis, because this comes with its own challenges, which is, one is the corporate governance challenge, two is the fact that you could have these sudden shocks because of various other reasons. So it's a very stock specific arena, but we are quite bullish on the space.
Okay, fair enough. Now let's discuss your outlook when it comes to the commodities sector
Sure.
as well, because I would say that that's not insulated from shocks either,
No.
because of the kind of news flow that we get, very cyclical in nature. What makes you, tilt towards this space given the kind of
So actually, as we speak, we are not as bullish as we were in the past. So actually,
Has that changed
yeah,
recently,
significantly. So in the last 2 years, if you see, commodities were easy trade, because 2 years back they were trading below half-time price to book, and there was a easy runway. I mean, these stocks are up, say, whatever, 2 times, 3 times. All of them have moved up significantly. As you see slowdown in the global economy, which is recession in the US, whether they call it a recession or not, slowdown in Europe, and even China post their opening hasn't really picked up as one would have expected. Having said that, my own personal view is that the non-ferrous still looks quite exciting, because the spending as far as new mines, capex, has been so limited, that as the economies pick up and the spending comes back into infrastructure, look at the amount that US economy is trying to put in infrastructure, we think the non-ferrous will come back faster. So if at all one has to look at, we are more bullish on the non-ferrous than ferrous.
Okay. Now, this does not feature in your list at all, but I'm just venturing and asking your outlook. The new age financial tech companies, we actually had some interesting data called out last week that a lot of them, barring Nykaa, has seen a very smart recovery from their 52-week lows. Is it very case specific? Are you tilting towards this space? Would you look at it?
So our initial view when these IPOs came, we were not looking at them at all, because we really didn't understand the valuation that they came at. Now that, as you mentioned, they've corrected almost 60-70% in some cases, we are starting to engage with them and trying to see if there is a case as far as a profitable business model is concerned. I wouldn't say that we've jumped into it as of now, but we are watching the space carefully. At least now it looks like in some of the cases, some of the companies, there may be a case to look at. Maybe valuations are still slightly high, but you have to do your groundwork. You never know, when markets are volatile, you get a chance to invest in them.
Are you getting a chance to invest in IT then as well then?
So IT, at least we have mixed view within our firm. I mean, we saw the guidance given by one of...
I think that's the case across the street,
Yeah.
right? Everybody is divided.
Yeah, so my personal view is that the bigger problem for the IT sector is not what is happening with the banks in the US and what impact it will have. This is a very short-term impact. My bigger worry is what happens to generative AI. Because if you see that one of the easiest work that gets replaced by generative AI is actually coding. So Amazon just launched its generative AI specifically for coders, called Code Whisper. So basically, if you're coding, from what I understood from experts, is that if 10 people were doing coding work for a particular job, now one person can do that in half the time. So basically, one way of looking at it is that your productivity will go up, but the other way of looking at it is that if your revenue model is billing based on man hours worked, then your revenue will fall substantially. Also, you will need to hire far lesser people than what you need. And if you look at the Indian IT space, almost 30 to 40% of the Indian IT space is people who have lesser than 1 to 3 year or 1 to 3 year experience bracket. So basically, your pyramid is very bottom heavy. So these are the coders, and your attrition is very high here. You will need to hire far lesser people here. So I think this is a space that has to be watched very carefully. I think they are getting disrupted already in a small way, which is when I look at Infosys guidance or look at their number of people. They had 5,000 lesser people between Q3 and Q4. I would be very cautious at this market, because the thing is moving very fast, and it has to be, maybe some of the smaller companies will benefit, but for a large company to move the entire business model is going to be tough. I personally remain underweight on this stock. As I said, there's split view within our firm itself.
But you're not alone. World Economic Forum is talking about how 25% of the industry jobs are likely to be taken over by AI. And similarly, in India itself, there are reports talking about how 22% of the jobs can actually change the texture in a very, very large and meaningful way, given the way AI and generative AI, as you talked about, is disrupting the space. But shifting focus back to the financials, PSU banking space is one thing that you were positive on.
Yes.
Do you think the best of the earnings or the best is already baked into the price?
So I think best as far as stock price is concerned, I would say in terms of the rate of change has already happened. Because they were trading at say 0.3 book, most of them are closer to one time book. But in terms of earnings, we still think that most of them, if you do your work properly, can still give you earnings growth of say anywhere between 30 to 40%. So we are expecting that some of these PSU banks can just give you the earnings related return. So no longer the re-rating is possibly behind us now, but earnings related returns can come because provisioning is something that they have made so much over the last 2-3 years. I don't see too much of provisioning requirement in terms of credit cost that they need in their financials going forward. So you still have some cushion coming from the credit cost. So your top line may grow at say 12-15%, but your bottom line could grow much faster because of lower credit cost requirement.
Would the rationale for looking at the insurance space as well be very earnings driven?
So I've been a bear on life insurance for a while, and I don't think my view has changed much. And this is so what happened in the budget was exactly my view, that the life insurance space is basically a play on tax arbitrage. Some bit of
The under-penetration of just the pure product of life insurance is something to play on?
So this is actually a myth that life insurance is underpenetrated. So if you look at life insurance penetration in India is 3.5% of GDP. Country like China is 3%, and their per capita is $10,000, and we are at $2,500. You look at any of the emerging countries, take Brazil for example, or Indonesia for example, we are far higher in terms of penetration and when it comes to life insurance. And these data are also published in the economic survey. People don't read it, but a lot of this data is
that misnomer for us.
Yeah, so I can go on and on life insurance over penetration. The total number of outstanding life insurance policies in India is about 350 million. Number of households in India is about 300 million. And if you assume that only half of them are insurable, you're talking of 2 life insurance policies already per house right now as we speak. So as I said, this product, they have not been selling protection, they've been selling a savings product. So if you talk about protection, maybe we are under penetrated, but I don't think the life insurance companies like to sell protection. They prefer selling the easier product, which is savings product, which again the tax arbitrage in my view will go over a period of time. A large part is already gone, but whatever is left will go. Looking at the way the government's mood is, the way they have addressed the debt issue, mutual fund issue, I think this is the last product which is available, which is tax free, which will go in my view.
So bearish on the insurance space as a whole. When you say ancillaries, can you just specify for us what is it exactly that you're looking at?
Which ancillaries?
That's what I'm asking you in terms of, is it auto anc that you're looking to play, or as a space? How would you be looking?
No, I think that auto ancillary as a space is very stock specific. So if you look at auto overall growth for India and you take a 10-year CAGR, you'll see that none of them, passenger vehicle 10-year CAGR is about 3%, two-wheelers about 1 or 2%, commercial vehicle is also 2-3%. So over a 10-year period, autos as an industry hasn't done well, but there are stock specific or pockets where you see growth.
Okay.
So currently if you see EV seeing a lot of growth, so companies which are addressing the EV market are seeing growth. So I think it's a very stock specific opportunity that we are bullish on.
Even for engineering maybe within this space?
So even engineering, actually a lot of the stocks are very expensive now, so we are relooking most of the engineering stock plays. But given the capex that I spoke about earlier and the government capex, some of these engineering companies and also some of the water related companies are benefiting because the government's focus on water and sanitation. It's become very stock specific. So one has to be careful when we say engineering. there's a whole host of companies.
We would love to get stock specific and ask you the exact names, but the issues of compliance is something we have to deal with. But Sridhar, given the fact that India has now become the most populous country, we have demographics which are quite favorable with respect to the young population, consumption as a whole, and urban consumption at that, the QSR place, the multiplex place, travel tourism. Is that something that one should look at seriously?
Yeah, so actually we are seeing a K-shaped recovery. I do a lot of road trips, travel. So consumption, wherever it is rural, we are seeing some slowdown, maybe because of the inflation that we've seen over a period that is coming off right now. But the impact of that we are seeing as far as consumption in the rural space or any discretionary consumption which is at the lower end of the basket. Higher end of the basket, we are seeing boom. So you look at the company which recently got listed on the which is basically a dealers of high-end cars. They are fully sold out. So you can clearly make out that high street is doing very well, and discretionary spending when it comes to slightly lower end is struggling right now in terms of same-store sales growth or even in terms of their actual sales growth. So I think this may continue for a while. This is actually a global phenomenon. Look at what is happening to Louis Vuitton. I mean, they are sold out, they're hitting new highs every day. So I think we are following a similar pattern where, spending as far as at the higher end is much better. So that's how I would look at, say, consumption and discretionary consumption, that you have to look at pockets where you are really seeing high growth and stay with that. I don't see that changing in a hurry right now.
I don't know if you're contributing to the wallet share of Louis Vuitton, but you certainly are when it comes to your wonderful trips. What's been the latest one? You've been penetrating deep into the jungles.
Yeah, so I did a 10-day road trip to Assam and Arunachal, and it was quite an eye-opener because the amount of infrastructure spend that has happened in Arunachal and
are those your clicks?
Yeah, these are all I am also a passionate wildlife photographer.
I remember seeing your pictures from Antarctica. That was, I think, 4-5 years back.
Yes, 2019.
And these look spectacular.
So this is the Nal Se Jal program which the government is promoting.
So and was it a work trip that then became?
Well, if you're a fund manager, you're never off work, right? So I saw a board which spoke about...
But if that's what work looks like, I want to be a fund manager.
It's quite interesting. It's quite interesting traveling to some of these places because one of the program which the government really is focusing on is getting tapped water to people. And I only read about it. And when I was passing a village, I saw a water purification unit. So I got off to see what exactly is happening there. And then as I walked across the village, every house had a tap outside their house. So the Nal Se Jal program is actually there. This is a remote village in Assam. So I think a lot of work has happened as far as some of these government programs. Even roads, infrastructure, the Pradhan Mantri Gram Sadak Yojana is something you see when you go to village. No longer do you see, mud roads in the villages. They are actually concrete roads. So I think a lot of work. So only if people step out of their, houses and move to, that is when you get to see a lot of this work.
We would love to do that. I think we should all call Nikunj and kind of tell him that we need to do the road trial to get the on-ground reporting.
So next time I'm going, I'll call one of you guys.
Please
so you can cover the story also.
I think that sounds like a brilliant idea. But for now, we'll take your word on that. So infrastructure is one thing which clearly is working, and then travel and tourism, where Sridhar himself has been contributing quite a bit when it comes to back home as well. Thank you, Sridhar, for joining us today and talking to us about a whole host of issues. But for now, the market is not that excited. We